Hello, my name's Nick Axford. I'm Head of Asia Pacific Research for CBRE. And joining me today to talk about the real estate market in Seoul is Justin Kim, Head of Research in Korea. Thanks very much indeed for joining us, Justin. Let's start by having a look at what's happening in the economy.
All right. Macroeconomic indicators suggest that the South Korean economy is currently at a low point, but is expected to improve starting in the second half of 2013. Real GDP growth recorded a relatively low figure of 2% in 2012, but forecast for 2013 and onward is looking more optimistic at growth rate of approximately 2.8% or higher. CPI inflation and sovereign credit rating are likely to remain stable in the coming year, whereas foreign direct investment and base rate are expected to receive downward pressure. And unemployment rate was kept low at 2.8% in 2012, but projection for 2013 is slightly upward at 3.2%. Overall, South Korean economy is at a low growth period as of now, but recovery is underway over the next 12 to 18 months.
Okay, so not the strongest of economic outlooks. How is that feeding through into demand in the occupier market, and how does that relate to supply?
Yes, as the chart on the right column suggests, there is a noticeable amount of new office buildings on pipeline in Seoul office market over the next 2 years. Accordingly, vacancy rate is expected to increase, especially in Central Business District and Yeouido Business District. Net absorption is likely to receive a negative impact as well, considering the declining demand for office space lately due to slower economic recovery locally and globally, and reduction in hiring plans by chaebols, the Korean conglomerates. Okay,
so one might expect that this would have some kind of impact on rents going forward. What have rents in the market been doing recently, and what do you think is the outlook in the office sector?
Yes, backed by economic growth over the past decade, Seoul Grade A office rental trend has continued a modest upward trajectory due to the comparatively high rental levels set by newly supplied buildings. Average face rent will continue to escalate in the foreseeable future. However, as the practice of rent-free period and tenant incentive provision becomes increasingly prevalent, average effective rent is likely to experience a downward pressure. As such, the gap between average face rent and effective rent in Seoul office market is expected to widen further.
Okay, so headline rents may well increase, but we're expecting softening of actual effective rents receivable. From an investment point of view, how's that affecting investment confidence? Because clearly the outlook isn't as strong as it might be. Is that impacting on investor demand?
Yes, so office investment market has enjoyed a stable transaction volume since 2007, with 2011 being a booming year for both local and foreign investors. Domestic institutional investors have become key players in the scene in recent years, and domestic pension funds, asset management companies, and insurance companies will expand their presence in the market going forward. In the face of economic downturn, many corporations are selling headquarter buildings, and this trend is also likely to continue for the next 12 to 18 months. Additionally, another trend has been witnessed is that the interest in Grade B office building is on the rise.
Okay, so just finally turning to trends in terms of pricing and cap rates, how do you see that evolving?
Capital value trend of Grade A office buildings shows that CBD capital value is currently at a stable state. Gangnam Business District, the GBD, capital value climbed on an upward trend in the fourth quarter of 2012, while capital value of YBD Yeouido Business District dropped in the same quarter due to huge supply in 2012, such as International Finance Center with the GFA of 330,000 square meter. Average cap rate for Seoul office market at large has been increasingly slightly throughout 2012. In the upcoming year, both capital value and cap rate are expected to remain steady and maintain current levels.
Okay, so thanks very much indeed, Justin. Clearly, some short-term challenges, both from an economic point of view and in terms of new supply coming into the Seoul office market, but certainly we're seeing interest from investors on the basis that as we work through those economic and supply side challenges, over the medium term, the growth prospects in Korea certainly make it still an interesting investment market.
Yes.
Thanks very much indeed. That's all we have time for now. Clearly there is much more detail to discuss about the property market in Korea. If you are interested, please do download our real estate publications, which are available from the website, or contact Justin and his colleagues in Korea for more information. Thank you very much for joining us. If you're interested, there are other podcasts and videos available, plus, of course, our full range of research publications available on our website. Thank you for joining us, and we hope to be with you again soon.